Hello everyone and welcome back to a new video. Shawn's the name, and today I want to talk about my experience of buying my first ever commercial real estate building. Now, while I've closed hundreds and hundreds of residential real estate transactions, I've never actually closed a commercial transaction until a couple days ago, and the differences between the two are so different, and there's almost no information out there on commercial, which is why I wanted to share my experiences today. And this is a little bit of a different video than what I normally do. I am actually headed over to the building because I do want to show you a little walkthrough of the building that I did buy, and I want to talk about kind of the differences, mainly in the financing aspect of it, on our way over there, because it's definitely unique and I feel like it's worth sharing. I might be a little biased since I am a mortgage lender, but in my opinion, any sort of real estate acquisition, the most important aspect is the financing aspect, because if you can't buy something, who cares what you're buying, right? But there's four main differences with being able to purchase a commercial building when it comes to financing, and the most prominent, or I guess well-known one, is the fact that to buy a commercial real estate building, your down payment is gonna have to be a lot bigger than it would on a residential purchase. Because on a residential purchase, you could kind of home hack your way into buying real estate. You could occupy it as a primary residence and put as little as 3 to 3.5% down. You could even do a down payment assistance program, get in for no money down. So there's a lot of ways to acquire residential real estate very easily with very little money down. Now, on the commercial side of things, even if you plan on occupying a property and you're going to own or occupy it, which is the building that I bought, you're still having to put down a good chunk of money. Most traditional commercial lenders are going to want anywhere between 30 to 35% down. You can do it in some cases with a little bit less down, but it's a lot more challenging. And not only that, but the price of a commercial building is typically a lot more than a residential building. So if you're looking at percentages and go, okay, I need to put down 30% on a $1 million building, or hey, I need to put down 3% on a $300,000 building. Very different. Ultimately, you got to have a lot of cash, all right? And I actually was able to get in with putting 18% down. I'll tell you how I was able to do that after I go through these other topics, but I got in with 18% down. I bought the building for $1,050,000, so you can kind of do the math on how much that was in just my down payment, not including my closing costs. But you need a lot of cash to put down. Now, the second thing is the property type. So when you're buying a residential building, you're buying a building that people live in. That's all people do with it, right? They're gonna live in that building, whether it's a condo, townhome, single family residence, manufactured home, whatever it is, someone's going to be living in that building. When you're buying commercial, it's different. The use of a commercial building solely depends on what kind of building that it is, right? If you're buying a gas station versus a warehouse versus an office building versus a multi-unit like big condo association or something, right? There's so many different types of properties that you have to kind of work backwards when you're buying a commercial property and really hone in on what property type you want, because the financing is going to vary tremendously around that. For example, not a lot of lenders like to lend on anything related to the auto industry, whether it's a garage like mechanic shop or some other sort of auto industry. You're going to find a lot harder time getting lending on that, just because it's just kind of a less desirable property type and kind of the way that they're usually treated. Then the third thing is the actual type of loan that you're getting. Now, when you're buying a residential home, it's 99% of mortgages that are done are going to be on a 30-year fixed rate mortgage. Very simple, very easy. Your principal and interest payment are not going to change for the next 30 years or 360 months, right? Now, on the commercial side, that's very hard to find, a 30-year fixed rate mortgage. It almost doesn't exist. Typically what you'll see is either a 15-year fixed rate mortgage, or what's, I guess, more popular is a whole bunch of either ARMs, adjustable rate mortgages, or you'll see things like, hey, it's gonna be a 15-year term, but a 25-year amortization schedule, which means that your payments are based on 25 years, but that your term is only as good as 15 years. So that means that other 10-year difference is gonna be due in a balloon payment at the end of those 15 years. So the type of loans are very, very, very different, and I've seen some super unique ones, maybe some interest onlys. There's not a whole lot of regulations when it comes to types of loans in the commercial world, so they can be a little bit ugly. A lot of them come with prepayment penalties. That's kind of normal. So all of that gets kind of factored in. I was actually able to secure a 25-year fixed rate mortgage. I was going for the longest term fixed rate mortgage that I could get, just because of how low interest rates are right now. obviously, it'll depend on the property type, and that's why the loan programs will vary so much, is property types come in and out of the market. If you look right now, shopping malls aren't the most popular types of commercial buildings, yet a warehouse is super popular and they're red hot right now. The industry will ultimately change based on the property type that you're getting, and that's why a lot of lenders will give unique loan terms, because you might only be in a building for 10 years, right? You might only have use for it for 10 years, and then you'll kind of plan a loan program accordingly. This is supposed to be sunny Arizona, and it's so hard to see in front of me right now. But the last thing I want to talk about, the number 4 thing that's a little bit different on a commercial building acquisition, is the fact that most lenders are going to want to see some sort of experience of you already owning commercial real estate to be approved for your loan. So that's the kind of catch-22 of, well, I want to buy commercial real estate, but I need experience owning commercial real estate to buy the commercial real estate. So how does that happen? Most of the time, this is pretty much solved by partnering up with someone who's already owned commercial real estate. So someone who has a resume of owning 1, 2, 3, 4, 5 buildings will partner up with a new investor who will bring in funds and kind of do the deal together. Now that's the most common way of doing it, versus on the residential side, you don't need any experience. In fact, you actually get a little bit more benefits if you don't have experience. So that's a big difference between resi and commercial. Luckily for me, I didn't need a partner because, again, I went with a unique loan program that didn't really require me to have any sort of commercial real estate experience, but I still do have residential real estate experience, which is what some lenders will at least want to see at the very minimum when you do go to buy a commercial real estate building. Now, when it comes to my specific loan, I actually did not do the route of a normal loan, like I was just saying, right? I put 18% down. I got what's called an SBA loan, a Small Business Association loan, because I had the loan underwritten off of my new company that's going to be occupying the building. X2 Mortgage, you should check it out online, x2mortgage.com. But I was buying a building that I wanted to occupy for my new mortgage company, and so I got an SBA loan basically to allow for very little down so I could put more money into actually building the company up, and it's more so structured as a small business loan that's secured by a commercial real estate building. So that was the really cool thing, because I got to basically get into the building with very little down in terms of commercial, very little down, which puts a lot more cash in my pocket. Now, I was originally planning on putting like 30% down, but when I realized I can put a lot less down, it was great. When I realized I didn't need a partner, it was great. And our property type, which I'm going to be showing you, is actually a flex space, half warehouse, half office. That was actually the biggest hurdle in the entire, process, was just getting approved for a unique type of building for the use that I'm going to be using it for. But we got past that hurdle, closed, everything's good. So if you're thinking about buying commercial real estate, I'll give you kind of like a quick synopsis. Just plan on putting down a lot more money than what you'd expect, right? You need a lot more liquid cash, because not only is your down payment bigger, but your appraisal is expensive. The appraisal is like $5,000. You got an expensive appraisal, you got an expensive inspection, environmental cert, all those things. I mean, your closing costs in general, like when you're in the commercial world, it's the big boy league, and you're not just spending your typical, $10,000 in closing costs. No, you're spending far more than that just to get to the closing table. So you definitely want to have a lot more cash saved up. You want to have some sort of experience owning real estate, hopefully commercial real estate if possible. And then on top of both those things, right, you just want to be careful with the loan program that you're actually getting into for the building type that you're buying, to make sure it actually makes sense for the use you're going to have for it. But it's exciting stuff when you're able to buy some commercial real estate. All right, we're pulling into the building now, so I am going to do a couple things at the building first, and then I will show you a little walkthrough tour of it. And yeah, it'll be fun. Bada bing, bada boom. Fairly large building, I guess. It's not that one. It's just this guy right here. And we'll walk in. All right. So this building's going to be getting a lot of work. But right as you walk in, you've got yourself, a little kind of front desk area. You can see kind of an ugly kitchen right there. And then we've got a little conference room in here. Warehouse is going to be in the back. I'll show you that in a second. Over here, just got some nice little office areas. This is a 2-story commercial building, which we'll go up in a sec. Office, that's going to the warehouse. Bathroom. The cool part about this building is the fact that it is a flex space kind of building. So it's, half office back that way, and also half warehouse, which is this right here. Semi is not included with the building that is leaving in a couple days, but we got a massive warehouse kind of space in the back to do whatever you need to do back here. So we'll be kind of using the space, probably need to fix that. We'll be kind of using the space in a unique way. I'm really excited for the plans we have for this place, but I do want to show you the upstairs really quick. Bang! All right, lots of work's going to be happening up here. We've got kind of an open office area in here. There'll be just a bunch of desk space and all that good stuff. Window out to the front. Right here, that wall is coming down. We've got little office space. This is kind of glassed in. Those two walls are coming down. We're gonna be doing some glass offices along there, and then you've got a nice little outlook from here with all of this kind of open desk space. So the cool thing about this building is you can use it for pretty much anything. And I guess my goal with buying it is gonna be to fully renovate it and bring it kind of to the 21st century. We're talking flooring, we're talking walls, we're talking fixtures, we're talking furniture, pretty much everything in here is going to be a complete new and redesigned look, and I'm excited to kind of show you what it's going to look like afterwards. I'm doing a very brief, kind of simple walkthrough right now just to give you an idea. I'm going to do a more kind of formal, here's the before, here's our specific plans that we have for the building, and then kind of an after of what it all ends up looking like. If you've seen the project I did on the residential duplex property that I own, you'll kind of get an idea of what you can expect on this channel. So if you haven't subscribed already, you definitely should. But yeah, I'm excited. That's pretty much it for this building. I mean, there's gonna be a lot of stuff that's going down. I can't wait to bring you guys along for the ride. Hopefully you guys are interested in seeing a lot of this stuff. If you've been thinking about kind of buying a commercial building, or maybe some hurdles you run into, or maybe have any questions about it, while we don't lend on commercial buildings yet, I did kind of learn a lot and would be happy to share any info that I have learned. So drop me a comment down below if you like a little bit of insight, a little bit of guidance. Definitely a beast, but hopefully worth it. But I ultimately hope you guys learned something new with this video. If you did, please hit that like button. It really means a lot to me. If you can, hit that like button. Subscribe if you're new around here. Otherwise, I'm going to take this bad boy for a joyride since it is in my building now. And I'll see you guys in the next one.